Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jayaram Krishnamurthy, and wishing you all a very happy Makar Sankranti to all the folks listening out here. And just like how the kites soar on this special occasion, we had the USDINR, which kept on soaring yesterday after a gap up opening at 86.20. It even traded higher than 86.55 during the day. So, JK, it was an interesting day for USDINR, and I'd like to hear a bit more from you on this front. But on the other hand, Indian inflation eased to 5.22% as released yesterday, which puts on questions to the next steps by the central bank, whether a rate cut to support the slowing economy or hold. On the global front, euro also traded at its lowest levels since November 2022, trading below 1.02 levels. So, JK, what are your take on these activities across the financial markets?
Hey, good morning. Happy Shankranti and happy Pongal to all of you. Yes, the rupee definitely got attention of most financial market observers yesterday as it saw one of the largest daily weaknesses since January 2023. While dollar index strength and the new data showing economic strength in the US leading to higher yields is seen as the trigger. By far, the most important factor, according to me, is the much less aggressive intervention from Reserve Bank of India that has led the market to find its own level, at least till yesterday. And another sizable drop in local equities have actually made more damage to the sentiment on the rupee as well. While one can say rupee is at last moving relatively freely in line with the fundamentals, I think a move of 1% in the last 10 days trading, followed by a following 1.5% drop in December, could be considered as excessive and found the market struggling to cope up with it. Having been used to long periods of 2 to 3 paisa daily moves, thanks to Reserve Bank's huge interventions earlier in the months. So, question now on most people's mind is how far will rupee fall and where we are headed. Now, before I answer that question, let's also look at the global dollar. Let's compare the scenario before September 24, before the US elections, and where it is now. Before September, we had the market discounting as much as 250 basis points cut by Fed by September 25. And there has been an enormous swing of that in the Fed calls by the market. And now market expects not more than 0.25% this year. And then, of course, there are some people who even say there will be no cut at all by Fed this year. Back in September, dollar index was at 100.15. Most people were calling for a breakthrough 100 in dollar index and break above 101.15 for the euro. And now in 4 months, not only interest expectations have soared, have actually been sized down, cut expectations have been sized down, but dollar index itself has traded exactly 10 biggies from the lows. It traded 110.18, I think, yesterday. And now there are vociferous calls for it to go to 112, 115. It's some even pointing to 120 as well, and euro to go below parity, etc. So now the two things I am observing is that the markets are in another extreme now compared to September. I'm not saying dollar index will not go up further, but at least looking at the consensus calls in the market, I think market is positioned on the one side, on the long side of the dollar. Therefore, you may expect a pullback in the dollar index, irrespective of Trump, because a lot of Trump's expected policies are being have been discounted, and what is actually not discounted is the watered down tariff policy. Now, for example, yesterday there's been a news that China might sell its TikTok to Elon Musk, and these are things that may happen quietly as a quid pro quo for lower tariffs. So it is what is called the negotiate tariff being used as a tool for negotiation to get some deals. There are some also indications that China may be goaded into starting some of the manufacturing facilities in the US and investing in the US. So it's not as straightforward about the tariffs as it was being discounted. So these things might actually work towards market reassessing its expectation of tariffs and also the dollar's direction. We have seen the yuan really not finding it easy to go above 7.3536, and it has drifted back now. In fact, there has been some sort of intervention from Chinese authorities. They suspended the purchase of Chinese treasury bonds, and also they have been seen, fixing the Chinese yuan much lower. This also follows, the verbal intervention from Bank of Japan. I'm not sure how many central banks would be happy to see their currency so weak, with inflation concerns once again possibly rising. So I think in this background, I see even the rupee, after having moved nearly 2.8% in the last 1.5 months, is primed for correction if the dollar index also falls. We see that here also when RBI has been selling so much of dollars, market has bought all those dollars. It's not as though the market is not long. Market is also long. Definitely, speculative market in the offshore is long. So there can be some point where dollar index direction gets some doubts. You see the dollar rupee also drifting back. I'm definitely not in favor of buying dollars closer to 87. I would rather wait for a better level. And with premiums at multi-month highs, I think exporters also could use these levels to hedge. If they are under hedged, they should use these levels. So my call is that dollar rupee is not going to find it easy to cross 87. I mean, it should be considered as excessive if it does, and there can be something the market itself does without RBI intervention. Market itself may see an adjustment in the rupee to the slightly stronger side. I'm not calling for a reversal, but I'm just saying that this is a zone from where we can see some sort of a correction, both in the dollar index as well as in the and dollar rupee. Of course, as you mentioned, the CPI number yesterday was lower, but still staying above 5%. And I mean, normally this wouldn't encourage rate cut by the RBI, but market seems to be assuming that there will be a rate cut in February. More the growth concerns being weighed more by the new governor. So that's something that can be actually slightly negative for the rupee as well. However, the core inflation, coming off is slightly good news, and of course, food inflation playing a major part in these calculations. Today, we also have the PPI number from US, which generally comes after CPI, but this time it's coming ahead of CPI, expected to be slightly higher. And CPI tomorrow is also expected to slightly inch up on a month-on-month basis. However, with the market already having moved a lot in terms of the yields and also the dollar, I think so long as they are well within the expectations, the dollar could make a little progress further. And in the run-up to the presidential inauguration on Jan 20th, I think market could be less panicky about the dollar going higher, and maybe some sort of a profit taking is possible. So I am expecting some calmness to return to the rupee market as well. Thank you.
Okay, JK, that was really good. And yes, folks, we can, as JK mentioned, expect some sort of pullback in the dollar index with the kind of extremes which have been already built from the September over current period. As you can observe, there was a time where it was 250 basis points of cut expected by the Fed, which is now only at 25 basis point. A significant change of the dollar index as well, which was 10 biggies higher than what it was in the month of September. With respect to dollar rupee, yes, there was much less intervention by the central bank, and a sizable drop in the equities also helped the rupee weaken as it was observed yesterday. But some sort of corrections can be expected in the coming time, although it may not change, or although it is not observed that there can be a change in the trend. But as of now, the possibility of correction in dollar index and the USD INR are looking quite possible. on the domestic front, the core inflation coming down, as JK mentioned, was really good for the economy, and the PPI numbers for US can be observed today for further idea on how the US economy is doing with the past few months of steadfast economic data. That's it for today, folks. We hope you have a brilliant Makar Sankranti and the Pongal. Wishing you all very happy Makar Sankranti and Pongal for the all the listeners over here, and we shall come back again tomorrow with another round of updates. Thank you so much for joining in.